Hello and welcome to another exciting episode of Angel Insights, where we hear from some of the top performing business angels in the UK and the entrepreneurs behind some of their portfolio companies. I'm your host, Tom Britton, co-founder of SyndicateRoom, creators of the Access EIS Fund, which uses data to identify some of the top performing angels in the UK and builds a fund that co-invests with these angels. But enough about me, let's get to the show. On today's show, I'm delighted to welcome Kirsten Connell, venture partner at Octopus Ventures. Kirsten cut her teeth at eSynergy before spending 5 great years at SeedCamp, and then becoming managing director at the Cylon Accelerator, based in London, which is focused on helping cybertech companies scale up. Outside of Octopus, Kirsten is an angel investor, board member, and was previously involved in the Sherry Blair Foundation. Kirsten, it's a pleasure. Welcome to the show.
Thank you.
Before we dive into your specific angel investments, I was wondering if we could talk a little bit about your background, your professional career, if you will. One thing that I found quite interesting was you seem to have always been involved with startups, early on being with eSynergy and connecting high net worths to startups, then moving it to SeedCamp, then Cylon, and now Octopus. Was your intention from the start to get into startups? Was it something that you knew you always wanted to do, or did you kind of just find your way in the space?
Yeah, well, I feel like I'm so fortunate. I completely fell into this space by accident and very quickly discovered that I thoroughly enjoyed meeting startups, meeting angel investors and VC investors, and sort of just became addicted to working with startups. So very early on, I sort of realized like, wow, I'm so fortunate to have fallen into this and decided I definitely wanted to build my career around, supporting startups, and especially sort of more from the financial side of helping them raise investment and scale. And so I suppose that's then how I've matched the organizations that I've worked with is to stay very close to startups at the very earliest stages of their growth. How I ended up at eSynergy, gosh, like over a decade ago now, was by pure chance. As I said, a recruiter asked me what I was good at, and in the early days, you're not quite sure, but she sort of did a questionnaire and she's like, okay, you're really good at organizing. So she put me forward for this role at eSynergy, where I had to match, as you just said, startups who were looking for angel investors, and it started from there.
Cool. So when you started out, you were connecting startups and high net worths. Was either party involved in that more difficult to work with?
Yeah, it's a really interesting question. I think when it came to the startups, the challenging aspect was always really refining what do they do to make it super clear to any high net worth individual, because you have to sort of assume that they don't have that deep sector knowledge that the founder has. And so from a startup's perspective, that was always sort of the key area, which was always a bit of a struggle to really make that messaging succinct and compelling. And then from the angel standpoint, I would say that they were perhaps slightly easier, only because I think angel investing is very much in the early stages of a company's journey. I think it's almost more a gut instinct or a feeling or a rapport that you might have with the founder. It's perhaps less scientific and a sort of more of an art. And so sort of just judging, what would be a smart match, which angels would be really impressed by which founders, and sort of trying to manage those connections to make sure they were meaningful for both parties.
And when you say meaningful, beyond the kind of capital and a bit of sector knowledge, what other things were you looking for from the angels in order to connect them to the right company?
Their area of expertise, as you already said, what was their background? What do they feel comfortable with investing? What do they know? Where can they potentially add value? Or do they want to be really, hands-off investor? And that's also fine. I think, that honesty is actually really great to have that, just say, here's a check, and, I won't interfere on a day-to-day basis. I trust you guys to get on with it and execute your vision. And then I think it's ultimately just about relationships and meeting and discussing with both the founders and high net worth, what are they after? And then sort of just getting a feel for who is going to get on well, because as you know, it's a long-term relationship if you invest in a company. And so I think actually just making sure that sort of the characters align is equally as important to, the business plan or the financials or the sector of the market.
Cool. So you sunk your teeth at eSynergy, and then you got a chance to move to SeedCamp, which at the time was, I would say, well known, but not quite the behemoth that it's become.
Yeah.
What drew you to Seed Camp? How did that come about?
So again, I feel like there's a lot of luck involved in my career. So I got very fortunate. I got introduced to Carlos Espinal in, God, it was probably late 2010. So again, as you said, sort of in the very early days of Seed Camp, they were making a name for themselves, but they definitely weren't, the superstar status that they currently have. And Carlos himself had only really recently joined Seed Camp. So he joined, I think, towards the end of 2010 or early 2011 as the partner. And at that point, it was in a team of 3, and they were looking to bring on sort of a 4th member. And I think I just got so lucky to be introduced to Carlos at the right time, that they were looking to hire someone. And having already had some experience working with startups, they thought I was a good fit. And it was a very, very long recruitment process. I think, I was chatting to them, having lunches with them, drinks, doing various sort of proposals for them for, I think like 5-6 months. So that, they really took the fit of the team extremely seriously, but we established from both sides it was going to be a good fit, and joined them early 2011. So as I said, it's sort of pure chance having that introduction made to Carlos at the right time. And as you said, they then rapidly scaled. And so I feel really fortunate to have been part of the journey and then joined them at the early stages.
Were there any lessons from your Seed Camp experience that you then took over to Cylon, which we'll talk about in a second?
Yes, I mean, absolutely. I've always been a big believer, don't reinvent the wheel. So I took many of the best practices and the learnings that I'd had during my 5 years at Seed Camp with me to Cylon, and tried to, not just from Cylon, but, I really looked at what are the models out there, both in the US and in Europe, that work extremely well for startups. And so, the obvious ones to look at are like YC, and then here in Europe, it was definitely Seed Camp, and try to blend the offerings together to then, form Seed Camp and the sort of curriculum that we build, being a 3-month program.
Cool. In Cylon, obviously it's gone on to do great things, but at the time, here you're at Seed Camp. It's growing rapidly. It's creating a name for itself in the UK, in Europe, in the US even. I hate to ask so frankly, but why did you leave?
Why leave? I know. So I ask myself sometimes this question as well, Seed Camp, when I joined it, it was definitely momentum, but come 2015, when I joined Cylon, or at the very end of 2015, Seed Camp was on fire. It was like the Ferrari of Europe. They were best in class. They were finding phenomenal deals. They'd already invested in TransferWise and YPath, and they were, exceptional. If you're writing really small tickets and then growing them to unicorns in a short space of time. So yeah, hats off to them. They are an incredible team. So as you say, how on earth can you leave that ship? So basically, I got asked by Alex von Sommer, and he said, he was one of the mentors, and he came to me and said, I'm creating a cybersecurity accelerator. I need someone with your experience to run it. And at the time I was like, gosh, you're mad. Of course I'm not going to leave Seed Camp. I'll never leave Seed Camp. But after a lot of conversations, I actually decided that it would be a really exciting opportunity. I've been at Seed Camp for 5 years, and it was a phenomenal journey. But actually, the thought of starting something from more or less scratch, I joined Cylon, they'd already done 1 cohort. So it was still in the very early stages of building a name for themselves. So I actually thought going back and trying to build something from scratch again would be like really exciting. And the other element for me that was really compelling was the fact that it was so focused. So Seed Camp, as are sector agnostic. And I actually thought, if you have a focus, which is really broad, and I'm sure we'll come on to that still, but that could be very compelling in terms of finding the best companies within that sector, finding the best, corporates, talent, customers, investors. So I sort of saw that as a great opportunity. So yeah, it was a really tough decision, really, really, really tough decision. But yeah, so decided after 5 years, let's try something new.
And for those that aren't familiar with Cylon, can you just give us a quick rundown of what the program does and what it focuses on?
Yeah, of course. So it was Europe's first cybersecurity accelerator. And so it was a 3-month program, physically based in London, trying to find the absolute best, most promising companies in cybersecurity to support and help grow. And so they got a small investment check in exchange for some equity, and then a 3-month program to help push their product to market. And a really interesting founding team. I think that's also one of the key drivers as to why I thought it had huge potential. So Alex von Sommer was the founder, as was Grace Cassie and Jonathan Luff. So a really impressive group of founders.
Nice. And obviously the focus is on cybertech. And for those who aren't aware of just how big the cybertech market is, can you talk us through that a little bit?
Yeah, absolutely. The European market alone, I think, is in the billions. Last year, you had the really exciting IPO with Snowflake. Hopefully, this year, London will have their very own with Darktrace, and especially having a female CEO at the helm, Poppy. I think that's extremely exciting for the cybersecurity industry.
I think the first thing that comes to my mind 5 years ago, what is cybertech? It's protecting against malware and viruses, but it encompasses a lot more of that. So can you share a little bit more about all the different types of cybersecurity businesses that came through the programs?
Yeah, of course. And as you said, that was one of my big concerns in the early days. Cybersecurity, I was like, gosh, that's quite niche, isn't it? How are we going to find brilliant companies within this really niche sector? Because I didn't have a cybersecurity background. But then very quickly, you realize that it is quite broad. It's sort of, any organization that has data needs to have some form of cybersecurity software in place to protect their data. It's a must have. It's not a nice to have for companies and also a lot of individuals now. We live our life online. It's so broad, from email security to training platforms, cyber insurance was also a big area, threat detection, secure collaboration tools, and many others. So yeah, it really is pretty broad.
Yeah, I attended a few of the demo days, and I recall one time seeing a company that it's threat detection, but the way that they work it is kind of like a honey trap. So they create these false routes into the network that lure the cyber attackers in.
Yeah, exactly. It's like defense and offense.
Yeah, I was like, so you're not just putting up a firewall and something external, but you're actually tricking them to come
Yeah.
in and then like infecting them back so that everybody knows that they're malware. And I was just like, wow.
Yeah, exactly. The Israelis especially are very good at that.
It was incredible. You've got a bit of encryption, you've got a bit of blockchain incorporated as well, which is pretty cool. So then we come on to your angel investing though, because you've had great experience from the start, through to Cylon, and then you started to make your own individual angel investments. So first question, do you remember your first angel investment, and can you talk us through it?
Yes, of course. And yes, I do. So my first angel investment was in a company called Immersive Labs. I had a huge advantage in that I got to meet these founders and work with them or alongside them, day in, day out for sort of a 3-month period whilst they were going through the Cylon acceleration program. And I remember, so the founder of Immersive Labs is a gentleman called James Hadley, and he was just phenomenally impressive. And when he joined Cylon program, he had 1 employee, so very, very small. But there was just something about his work ethic. Others would be off to the pub and enjoying themselves, and there's absolutely nothing wrong with that. You need a healthy, life-work balance, otherwise you'll burn out. So I don't want to say long working hours is the reason I chose Immersive Labs, but there was something about James. He was so driven. He had such a clear vision. It was a very clear need that he was addressing in the market. Immersive Labs, just in case someone hasn't heard of them, they provide on-demand cyber skills training platform. So, within a huge corporate, be it PwC or Deloitte or whatever the large corporate is, they probably have a huge number of staff that would be extremely skilled within cybersecurity, but have perhaps never even considered that of building a career within that. So it sort of identifies talent, and it can upskill talent, and it could also be used as a recruitment platform. So it has many different functions. But there was such a clear need in the market because there was predictions of huge skill shortages within cybersecurity. There's obviously a bit of a lack of diversity within cybersecurity, which Immersive Labs also addresses. So there was an awful lot to get excited about around Immersive Labs, but I think it ultimately came down to seeing the drive and the talent that James had, which made me so compelled to join him on his journey and write my first angel investment check.
Fantastic. Obviously, drive is important and an ability to execute. But given you've got such access to so many companies through Cylon and Octopus and friends at Seed Camp, what are the other factors that kind of get you interested in particular companies, more generically?
Yeah, more generically, especially at the early stages, I think companies have little traction or little data to really do an awful lot of analysis on. Of course, you can look at the size of the market and the price point and some financial metrics, but I think companies at really early stages, for me, the execution risk or opportunity always comes down to the founder's ability. I already mentioned drive, but I think ultimately still to this day, people buy from people. And is a founder, are they charismatic enough or compelling enough to build that, to share and articulate their vision, to get the best early hires, to find customers, to raise investment? And it's sort of such an all-round skill set that you need as a founder. When you meet someone really special like that, they do stand out from the pack. And I think ultimately it's that sort of skill set that the founders are going to need to turn their companies into success, hopefully. And so for me, it just comes down to the founder's ability to execute. And then to bring that down one level further, there has to be a rapport with the founder.
Okay. And you've said founders, just catching on that many
Yeah.
times. So there's a lot of people that say you should always invest in where it's not just one founder. Have you made any investments where it was a single founder?
Yeah, do you know what? I've never actually thought about it in that sense, but actually I have. So I've made about sort of 6 angel investments, and half of them have been a single founder. So
Okay.
whilst I know the advice is always, you need a team, I have probably not followed that rule myself. And that probably comes back to my point where if I think the founder is good enough, they will find that early talent to join them on the journey. They sort
Okay.
of back them to build a great team.
Do you find, though, because you kind of highlighted it really well there, that the founder has to be able to sell the vision and also deliver on it?
Mm-hmm.
Do you find that when the teams are split, when there's multiple founders, that more often than not, it's one who is, say, more visionary and the other being more technical? How do you see that?
I think that combination works really well. What can be a red flag is when you see 2 potential CEOs, both co-founder really wants to have that CEO seat. And I think there just needs to be a lot of clarity early on as to who's going to be CTO and CEO. And I think in the best case scenario is when it's very clear that both co-founders are extremely happy with the role that they are playing. And I think you see that especially in a lot of cybersecurity companies where more often than not, the founders are quite technical. So actually one founder being the CTO is brilliant. That is what they want to be doing. And then the other taking the more sort of commercial CEO role works really well.
Fantastic. And you mentioned this being one red flag, but are there other red flags that, in hindsight, you have noticed about some of the companies that potentially went through one of your programs that looking back, you go, you know what, I'm going to adjust how I deal with a company if XYZ happens or if they demonstrate this attribute?
There are definitely some examples where I've seen where the founders have everything you would want them to have, the vision, the drive, and where the company ultimately hasn't succeeded. And I think that then just comes down to the market not being ready. They're almost too early. And that whole educating the market piece is sort of where it falls apart. Ultimately, what can you learn from that? I guess you can learn to build in a longer runway for companies who are really disrupting an industry where they have to educate the customer as to, what the problem is.
Hmm.
So that could potentially sort of be another red flag. It then actually helps if there's competition in that market. So that's sometimes reassuring. I think that's the other thing. If someone says there's no competition, for me, that's always, a huge red flag. There's always competition, even if the competition is to do nothing. So for me, that's always the biggest, but I think that's so well known now.
I think that's actually super important because obviously if there is no existing market for it, then the potential is limitless.
Yeah.
However, having to create the market takes a bit longer, and that means a bit more cash as well. Moving on just a little bit, talking about not just companies, but kind of portfolio construction. So clearly you've had a bit of an emphasis on cybertech companies given your time at Cylon. But now that you're working elsewhere, do you think that you'll change your portfolio construction? Will you look to include a broader diversification of sectors, or do you think you're going to stick mostly with cyber going forward?
That's such an interesting point you raise. And so I've recently joined a couple of angel networks purely for that. Like I'd love to sort of diversify my personal portfolio. I've got a lot of exposure to just cybersecurity. That said, I suppose just through my natural network now, the deals that do sort of come to me are all still within cybersecurity. And so I suppose it's just going to take a little bit of time to see more diverse deal flow. That said, I have started looking into a few other companies. And actually this week I've done 2 due diligence calls with founders from different sectors. And I really found myself slightly at a loss in not knowing how to evaluate the opportunities, just not having that really clear picture of what's the competition, what are the challenges, Are all these sort of assumptions that they've made in their deck and that they're sharing, are they true? And it was only sort of a week or two ago where I was looking at making another cybersecurity angel investment, and I was just so quick at evaluating it and coming to a conclusion, is this a good opportunity? Yes or no? And I feel like I really struggle to go through that same process with any startup outside of cybersecurity. So I think the very next deal that I will do is going to be still in cybersecurity, but I'm really hoping that I can diversify it this year.
What do you think would have to change other than a broader understanding of more sectors to make you more comfortable with making an investment outside of cybertech?
So I think building up a really reliable network of other key individuals. So, if I don't personally have that conviction because I don't have the knowledge, then who do I trust? Who does? And then, you're almost backing somebody else's judgment. So I think being part of an angel syndicate or an angel group can definitely benefit from, the group knowledge, the group sort of due diligence, their network, the joint sort of feedback and insights that you can share with one another. So I think just building those relationships will be really essential in sort of making my first investment outside of cybersecurity.
Fantastic. So let's turn our attention to two companies for a second, or one in particular in your portfolio, Tessian, who seem to be doing fantastically well. I'd love to learn what you thought about them initially, how involved you've been in with them since your initial investment, and you've learned from the experience in backing a company that, fingers crossed, is going to hit pretty high heights.
Yeah, indeed. Fingers crossed for them. So some of the things I've learned with Tessian, for starters, when they joined, they also came through the Cylon program. And when they joined, it was 3 co-founders. And I think straight off, you realize what a great relationship they had, both in the office and outside of the office. So incredibly strong founding team. So that's just always so impressive to see. Again, they were addressing a huge market with a very simple proposition. I think that can't be understated as to how important that is to win customers. If you solve one problem and you solve it extremely well. Some of the lessons I've learned, again, they were at Cylon when they made their first hire, and it was the first external team member to join them. And so for them, this was a huge milestone in their journey. And they took that process so seriously, a little bit coming back to my C-Camp experience of joining the team as the 4th person. I suppose there's a lot of similarities there. They reviewed their culture, they created an entire onboarding process. They really wanted that 4th individual to feel just as brought in as the 3 founders, not feel like an outsider. So they put so much emphasis on finding the right person, who they needed, who would fit culture-wise, as well as sort of skill set and talent. And then the other thing that I think they did extremely well, and it was a really thought out initiative, that they decided there were then 4 gentlemen, and they really wanted their 5th hire to be a female. And they were really proactive about it, even in how they worded the job description, where they posted that job description. They were determined to find a female to be their 5th hire. And they found somebody wonderful, and that person is still with them and has been really influential in how they've built the company. So I think they've made some early hires, which they put so much thought into, that have really paid off. So there are definitely some lessons of having seen them grow and scale.
I think that hire one is quite interesting. Out of curiosity, is that first hire, the 4th team member, also still with them?
No, so he left, but only quite recently. So I was with them for, I'd say, the good 4 years. And then he moved on to go back into really early stage startup, to sort of do it again.
Do it again. No, so you got a good taste from that experience.
Exactly.
And to be fair, 4 years with an early stage tech company is like a lifetime.
Yeah, exactly. As you know, he's probably working day and night, and yeah.
Good on them. And I mean, it's quite interesting that they focus so much on that, because with fast growing companies, you often hear about scale fast and just hire and hire and hire.
Yeah.
And then you look at situations and you can read about it where it's like, they're constantly hiring and letting people go, or people are constantly leaving. High churn. Yeah. And it's good to hear they're focused on keeping people happy and working hard, because I believe in the same, like, treat your employees, I won't say quite like family, but like a proper team. And,
yeah, exactly. And then, they're all brought in, they all have the same vision. And I even met them, was it last year, probably the year before now, when I went to RSA, and they had a huge stand, in case no one's heard of it. It's a massive cybersecurity conference in San Francisco. And the wider team was out there, and they were on cloud 9. They all wore these fluorescent orange, I think it was Nikes. And you could just see they all lived and breathed the vision of Tessian, and they were so brought into the company. And to create that culture takes an awful lot of work. And as you said, a lot of dedication, getting it right from the very first hire. And you could really feel that.
It's more time up front, but it saves you so much time later on.
Yeah.
So
yeah,
cool.
It pays off.
Tessian's obviously a success story, and no angel doesn't have any failures in their portfolio. I would love to hear about some of the lessons you've learned from the failures of not just your portfolio, but companies that went through Seed Camp or Cylon, and how you've augmented your approach to startups because of those lessons.
One of the ones that, as I mentioned, is where you have to educate the market. I think that's one. The other sort of hurdle that I've definitely experienced is where, and I suppose this is more often than not the case, when a startup does fail, I would say it typically comes down to the co-founders' relationships and either having slightly different visions as to where they want to take the company or different aspirations. And so that's where you often see a company failing, because there's no clear direction internally as to where they're going. They're not sure if they want to raise, 5 million or 10 million. One might feel far more comfortable with raising 1 million and spending that 1 million within 6 months, whereas the other one wants to be more conservative. One might not have a family, not have a mortgage, and be able to work day and night, and the other can't. So, there's so many different scenarios where the founding team can start off really strong together, but actually grow apart. And I would just say, without naming names, that's probably the biggest reason why I've seen companies fail. And, it doesn't mean it's always drama. Sometimes, people just have that really honest conversation and part ways on extremely good terms and just realize, no, this isn't for me. I tried it, but creating a startup is hard. And so then they might go back to some sort of less risky, all-consuming career.
I think you kind of touched on it though, because oftentimes there's a lot of excitement early on when the business is founding and the world is your oyster. But as the company grows and as the founders find themselves, differences start to arise in terms of direction and time that can be spent working. Is there anything that you can do up front to kind of sound that out a bit more? Have you found any tests that dive into that to try and figure out, will those groups stay together? Are they actually harmonious, or is it just because they've got that kind of cloud nine of starting a company?
It comes back down to sort of also my experience at Seedcamp. And I think they were seeing this so frequently that they created a side website called Seed Summit, which has some really great templates on it. And one of them is Founders Agreement. And so all the companies were advised to print that off, go to the pub or over a beer or a glass of wine or a sandwich, whatever it may be, sort of out of the office, try and have that really frank conversation together. What does success look like? Because again, these challenges can arise at any point. You might get an early acquisition request. One founder might be happy to walk away with, let's say 1 million, but the other's in it for the long game and no way would they ever sell out. And so you sort of have to have these key milestones along the way. Like, are you aligned? What does success for one founder look like? What does it look like for the other? And can you actually put down on paper a broad outline of your vision and path that you want to follow? And so that you've actually got something sign an agreement between the co-founders. And even at the earliest stages, the best practice is to even go through that exercise if you're at a hackathon. Even I think the earlier you do it, almost the better in the journey. And I think if nothing else, the exercise of having those frank conversations is really enlightening for the founders. And so that's certainly sort of one way that you could potentially flesh out, are there going to be some issues, and at least sort of try and navigate it when the stakes are low, when there's not a huge offer on the table.
I think that's fantastic advice to founders and any investors to make sure the founders do that.
Yeah.
But look, I'm going to ask you a few quick questions.
Yeah.
We'll see how this goes.
Okay.
Shoot off the first thing that comes to mind when I ask this. So first, what's the best book you've read recently?
Red Notice by Bill Brower.
Haven't heard of that one. What is it about?
It's about this investor who becomes Putin's number one enemy. It's brilliant. So it's a true story, but it's sort of fascinating. The world of spies and how he goes about escaping Russia.
Okay, that one's on the list. So second question, what's the tech trend you're most interested in at present?
So the one I'm really trying to educate myself on is healthcare. I think there's going to be a lot of new technology, especially around COVID, vaccinations coming to market so much faster. I sort of see healthcare more broadly as being a huge growth sector.
Excellent. What is it about investing startups that you find most rewarding?
Working with brilliant, inspirational founders.
Short and sweet. Perfect. and of course, the last question of the show is, with the benefit of hindsight, what is one key thing that you would have liked to know during your early days of angel investing that you know now?
It's that level of conviction, trusting your instincts is the biggest advice I would give any sort of angel investor. What do they say? Business plans don't stand up to reality. Whatever the saying is. And I think that's true. I think having conviction and trusting your instincts is key.
Well, I think that is perfect advice to end the show on. So thank you very, very much for your time and your insights. Well, hopefully we get a chance to revisit this in, say, 6 or 12 months' time when the world comes back to some normality and we can laugh about what we said here. But
yeah, absolutely.
for now, it's been an absolute pleasure. So thank you again.
Well, likewise. Thank you so much for having me. It's been great chatting.
Cheers. You've been listening to Angel Insights, produced by SyndicateRoom. Until next time, bye.